Microsoft Corporation, stock ticker MSFT, just recently announced its Q1 earnings report, and as of the close today on April 25th, the company was trading at $275 per share, but after hours, that's when it released its earnings report, and you can see since then it is up 8.51%, trading at around $299 per share. So in this video, we're going to be talking about that recent earnings report. We're going to be talking about why so many investors love this company, and we'll be finding the intrinsic value of this stock. So let's go ahead and jump into it. I'll scroll down here and we can see for the quarter ending March 21st, Microsoft earned $2.45 a share on revenue of $59.9 billion. Wall Street analysts had forecasts for Microsoft to earn $2.23 a share on revenue of $51 billion. So that is a huge beat for Microsoft, way outperformed Wall Street's expectations. And there was one quote from the CEO in the earnings report that really stood out to me. I'm going to list it off right here, but you can see he stated the world's most advanced AI models are coming together with the world's most universal user interface, natural language, to create a new era of computing. So that is a huge focus for Microsoft right now, and that is what has a lot of investors excited. Across the Microsoft Cloud, we are the platform of choice to help customers get the most value out of their digital spend and innovate for this next generation of AI. I know that is a buzzword we have been hearing a ton lately, but it is a huge focus for a lot of these companies, and Microsoft is definitely the leader when it comes to AI right now. And this is actually something I talked about on my Twitter account the other day, why I love Microsoft so much, because it is the second largest holding in my dividend portfolio. If I blow this up a little bit, you can see it makes up around 14% of my dividend portfolio, and I am currently up a little bit on this position. I'm up around 12%, it looks like right here. This is also a position that is paying me a pretty decent amount in dividends every single year. Right now, I can expect to receive around $87 a year from Microsoft. But I'll jump back over to my Twitter and I'll point out a couple of the reasons that I love this stock personally. And the first is something we'll talk about a little bit later in this video, and that's the valuation and the free cash flow growth. They have really solid free cash flow growth. And if we scroll down, we can see they have a great history of dividend growth. The company has a 10-year dividend compounded annual growth rate of 11.7% with a payout ratio of just 29%. And with them continuing to grow that free cash flow, we can expect that dividend payout to continue to increase at a pretty rapid rate. But right here, this is what's so important to me, and it's why I think a lot of people believe in this company long term, is their competitive advantage. Microsoft has an established customer base, an established brand, a strong financial position, a device product portfolio, and as they just talked about in their earnings report, they are a leader in innovation. And those 5 reasons are why I believe in this company enough to make them a major player in my personal dividend portfolio, and I plan on holding them long term. So let's go ahead and jump into our valuations and see if anything has changed since we have seen their recent earnings report. So I'll come up here and plug in the stock ticker for Microsoft and hit enter. And again, you can see all of this data is going to automatically load in. Now, the current starting dividend yield, a little below 1%. So I know a lot of people really don't like that starting dividend yield, but like I just talked about, that dividend growth has been phenomenal lately. If we look at this dividend history, let's go ahead and bump it out 10 years. We can see 10 years ago, they were paying out 23 cents per share a quarter. Now they are sitting at 68 cents per share. So it's almost tripled in just 10 years time. So you will see the dividend payouts continue to increase over time. Low payout ratio, like we already talked about. Analysts currently have a target price of around $300 per share. So after hours, it is trading right at that target price. And if we come over here, we can see institutional ownership actually not as high as I would expect it to see, and beta sitting at 0.93, so this will be a little bit less volatile than the overall market as a whole. Now, we can look at Graham's valuation and multiples valuation, but I think for this company, the 2 best valuations are going to be our discounted cash flow and our dividend discount model. So let's go ahead and look at our discounted cash flow analysis. I'll zoom in, and like I mentioned earlier, this company has phenomenal free cash flow growth, and we can see that over the past few years here, they had free cash flow growth of 24% and 16%. Moving forward, I'm projecting a free cash flow growth rate of 15% to the future free cash flows for this company and the terminal value, which is the sum of the future free cash flow past the year 2031. I then took the present value of those future free cash flows, added them together, added the company's cash and cash equivalents, which is a pretty large position, and subtracted out their total debt to get that equity value. Once I divided by shares outstanding, I came to a discounted cash flow price per share of $315 per share. Again, pretty close to what analysts' price target is as well. Now, when we look at the dividend discount model, again, we can see really solid dividend growth. We have dividend growth of almost 11%, 10%, almost 11%, and close to 10% again. So it looks like they're staying pretty close to that range, and I expect it to stay pretty close to that range long term. Moving forward, I am projecting a dividend growth rate of around 8.25% with a discount rate of 9%, and that gives us a really strong dividend discount model price per share of $392. Now, we can glance at Graham's valuation real quick. quick, but I don't think this provides the best valuation for them, but we will look at it. You can see their earnings per share, growth rate projections, and the current yield on AAA corporate bonds, and that gives us an intrinsic value of $206 per share. I do think this valuation is still important to look at, but it probably doesn't carry as much weight with the discounted cash flow analysis and the dividend discount model. Now, the multiples valuation is kind of the same way in my opinion. We have all these other tech companies, but really Microsoft and Apple are going to be the companies that trade at a premium, so this always doesn't provide the best valuation when you look at companies like Microsoft. So when we jump over to our output tab, we can see the three valuations that we use, and when we average them together, we come to an intrinsic value of $304.73. Now, at the closing price for today, the company was trading around $275, but like we've already seen, after hours, it's up to around $299 per share. So it looks like it is trading right at its intrinsic value at the moment. And the intrinsic value actually ends up being pretty close again to what analysts have for their target buy price. So for me, I'm super glad this is one of the largest positions in my portfolio. I think companies like this typically trade at a premium, so you don't get many opportunities to buy in at a good price. So I'm super happy to be up around 12% on this position. I think this is a company you can be confident will be performing very well for a very long time. They'll continue to increase their free cash flow and increase their dividend payouts for a very long time as well. If we come over here and apply a 10% margin of safety, you could see your acceptable buy price around $274 per share, actually pretty close to what the trading price was before we saw this huge spike in their price. If you apply a 20% margin of safety, you can see the acceptable buy price $243 per share, which you actually have had opportunities within the last year to buy in that range. It was trading as low as around $213 per share over the past year. So again, this is one of my absolute favorite dividend stocks, and I know that's not a very popular thing to say due to the fact its starting dividend yield is only around 1%, but I expect this company to continue to increase the amount it pays out in dividends for 10, 20, and even 30 years from now, which is one of the reasons I feel comfortable with it being one of the largest positions in my portfolio. So there you go. There's a quick update on Microsoft stock. If you'd like to be able to download the spreadsheet, you can head over to my Patreon page at the link in the description. Be sure to also follow me on Twitter, as I'm going to be talking about more stocks and their earnings reports that are coming up. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.